This conference will now be recorded.
Well, today we have a special guest with, I say, a special topic here, dealing with cover crops and crop insurance. It certainly has been an issue that has come up over the last, I'm thinking 7 or 8 years or so. And I just got to say that I have known Ryan for I'm going to guess at least 6 or 7 years. Not sure, but I first heard of Ryan. Uh, I'm going to say 6 or 7 years ago, and he was talking about crop insurance, and he was from the National Wildlife Federation. I'm like, what does the National Wildlife Federation have to do with anything in agriculture? I mean, honestly, Ryan, that was my first
I
thought.
get that a
Okay,
lot. Yeah,
I'm
yeah,
sure
I
you
get that a
do.
lot.
Well, then I find out not only is the National Wildlife Federation interested in helping farmers in their success and how they grow things, Ryan's also a farmer. So I'm like, okay, we got to listen to this guy. And I will tell you that Ryan has probably done as much as anybody in, I'm going to say, the nation to help to impact, influence uh, crop insurance guidelines from a farmer's perspective. And that's how I'm going to frame it, Ryan. So you can take it from there. You can correct me if I'm wrong with my accolades for you, but
Yeah,
you can take it from there and tell us a little bit about who you are and dive into your presentation.
yeah, that sounds good, Steve. I appreciate that
Yep,
introduction. Yeah,
sure.
so yeah, so Steve is right, and yeah, I do get that a lot, especially early on as we started getting involved in advancing soil health. And the reason why NWF decided that we needed to jump in onto crop insurance was basically for two reasons. One was that we saw this as a growing issue, especially as more and more farmers started adopting cover crops and soil health practices. The way that crop insurance was written and some of the rules and structures, and we'll talk about those here today, just do not fit well. And so we saw this as an impending issue. And we know the importance of crop insurance, and I've been using crop insurance for a few years myself. So I farm in Wisconsin,
Mhm.
part-time farm, corn, soybeans, small grains, looking to get into identity preserved grains. And so over the next 2 years, I have a couple of goals for my farm in terms of developing some on-farm storage to get access to some of those markets, and then also to add some livestock grazing to some of the cover crops that I've been growing. So again, just continuing to try to push that health of the soil, and so that's been my goal, and it's been helpful for understanding what we need to accomplish on crop insurance. Uh, like Steve mentioned, there's a lot of things going on here, and so I guess rather than dive into all of the big picture, I want to start sort of small, and we'll work out from there. So, like I mentioned, and Steve, let me know if the slides aren't advancing.
They are advancing on my computer.
Okay, great. So, like I mentioned, the changing context, we've got crop insurance that was predominantly written and designed between the 1930s and the 1980s. The really big change in the 80s was that the subsidy got ratcheted up to encourage more participation of producers. So we have rules that were written in that time period, and we have an always changing context. And you guys really represent the leading edge of that willingness to change and adapt with the time. And so I'm sure you guys are all aware of the growing consumer demand for sustainability. Just back in November, Nielsen studies released a report that showed that it's now up to 77% of consumers are willing to pay more for sustainably sourced products. That number just 2 years ago was 64%, and 2 years before that was like 50%. So we're seeing a very significant trend. You're all familiar with some of the water quality issues, so we don't have to really belabor that point. And you guys represent farmers turning to soil health. Now, like I said, there's some issues here, and so we're gonna take some time and just walk through each of these individually. So there are some eligibility issues. Some of you have probably heard of some of these rules that have been in place for the last 4 or 5 years. And unfortunately, those rules were, I would say, prejudice against soil health practices. And that would not be a misstatement. We had specific rules placed upon us that other producers did not have to do. We had extra hoops to jump through, extra paperwork, and extra risk. If you got something wrong, you just lost your crop insurance. So that was an unfortunate reality that we had to go through. We're going to talk about that, and then there's some hope here where things are getting better. Then I've got 3 other components here, issues in crop insurance, and these are much more structural or fundamental. These are the long-term changes. This is what we're going to be seeing, how crop insurance is going to have to evolve over time. And there are a number of folks working to help that happen. So these are these 3, annual contracts, the risk rating pools, APH calculation. I'll explain what those mean. But this is, in the end, this is going to get us towards a crop insurance system that works better with soil health practices. So just a quick story on some of the issues that we have been facing. And it sounds like we've got somebody from North Dakota, so this story might sound familiar. Some salinity issues going on, and a crop consultant who actually was the International Crop Consultant of the Year. Lee he's just a wealth of knowledge. And he's telling the farmers and his clients that if they are going to be able to produce, they need to deal with the salinity issue. And some of the best ways to do that are no-till and cover crops. And unfortunately, the crop insurance rules did not work very well with that. And so it came down to him telling his clients, you're going to have to make a choice. You either solve the problem or you hold on to insurance. That's a bad situation for producers to be in. And it's certainly unfortunate for the crop insurance system as a whole, because fundamentally, the crop insurance system should be rewarding producers for addressing some of these significant challenges. So this issue came to a head in the last few years, and we have some changes that have happened in the last Farm Bill. So I am happy to report that, well, let me just kind of lay this out again. So before the Farm Bill, some of this may sound familiar. So the crop insurance program referred to NRCS termination guidelines. So those were guidelines that NRCS created to provide advice to producers on when to terminate cover crops. And I'll show you a little part of that here shortly. But that was the go-to standard. If you were using cover crops and you met these guidelines, you were fairly safe. Now, of course, what happens when weather occurs and you are delayed in terminating those cover crops, if you fail to follow those guidelines, you just lost coverage. And that is not always the case if you are delayed in terminating weeds or delayed in applying fertilizer at the right time. So we had, like I said, a double standard going on here. You could get documentation from an expert at the time when you're deviating in order to provide that justification. And that is, again, totally different than how other practices, agronomic practices, were treated. Then there's also the definition of termination, where they defined this. The Risk Management Agency defined it as termination as being when growth has ended. Now, I don't know about you, but that doesn't really give me a lot of confidence in whether or not my termination method met their stipulation. Again, here, if they found that a field that was insured wasn't fully terminated, maybe you missed a streak, or maybe the crops, maybe the covers were taking their time to die down, that uncertainty could be caused to drop you from coverage. And so we had to get that fixed. And then we also have this issue for those in a summer fallow situation where RMA really stuck to the guns and they simply said everything has to be dead for 1 full year, which really defeats the purpose of cover crops. Now, I get it that There's certainly a moisture sensitivity issue in the arid West, but 1 full year is considerably extreme, especially considering that there are some variations here. You can have weeds growing that are taking up moisture, and as long as you terminate those weeds, 2-3 weeks before planting your insured crop, you're fine. So there were some considerable inconsistencies going on with RMA. All right, so how things change. So this is sort of the good news portion of, hey, things that we can take home and know that things are getting better, right? So in the 2018 Farm Bill, we've got a number of these things addressed. So instead of having separate eligibility requirements for your cover crops, they're now treated like every other agronomic practice. So that's through what's called the Good Farming Practice process. So with that, if there's a question about whether or not what you're doing makes sense and gives the crop a chance to get a decent yield, it goes through that process. That only occurs when you have insurance and you have to file a claim for a loss, and 2, the crop insurance company has some doubt about your practices. So you don't have to do anything beforehand. So we've got rid of the double standard. So that was a big jump. The guidelines are the guidelines that NRCS provides, they're still available and they're still useful predominantly for, I would say, for those who are new to cover cropping. If they are just learning, just trying some new things, that's a good safe spot to know that if I do this, I've got coverage. But that sounds like that isn't really necessarily this group. And so I'll talk about that process a little bit more. We can ask some questions here. So 2 other things here that we changed. We got a clear definition of termination. So here's the new definition. This is going to provide a lot more certainty for everybody here when they're thinking about how they're terminating cover crops. So the new definition is the date in which a farmer applies a practice that historically and under reasonable circumstances, so reasonable weather circumstances, results in the termination of the cover crop. So if it's something that you've done in the past that has worked, and then you're good to go. And it's not a matter of when the crops die, it's when you apply that practice. So it provides a lot more clarity for farmers so that they know, okay, this is exactly when it happened. And also, when it comes to summer fallow, we're still working on the details of this. And again, this has been a very long process with RMA. But we're getting them, creating the space where farmers in a summer fallow situation don't have to terminate a year out. And as long as they've got some evidence that this works from other agronomic experts, they're good to go. So I want to pause there. I think this is a good junction to see if there are any questions at this point.
Okay, I opened up. Thank you, Ryan, for that good foundational part there. I opened up the lines here. Anybody have a specific question for Ryan at this point? A specific question. Maybe now's the time, Don, you had a question about rolling cover crops after soybeans have emerged and terminating that way. Is that, are you on, Ryan? Can you just, or so Don, if you could reiterate that, that'd be a good time maybe to answer that.
Yeah, Ron, it's Don with NRCS in Indiana, and our stormwater district purchased a roller crimper, and we're still learning kind of how to use it. And last year in Indiana was a terrible year to try to learn how to use it because the rye just didn't do what it wanted to do, and we ended up in a case or two of when we wanted to kill the rye with the crimper, it was just too early and the rye wasn't growing well, and we planted the beans, and we came back over and we went over it again when the rye was at the maturity level we hoped they would die with the crimper. The beans are like the second trifoliate, and of course we're not sure exactly how that all impacts crop insurance, but is and it does that fit into this what is supposed to be working and all that kind of thing. We didn't have any issues. The beans done fine. You know, if there was an impact, it was because of the dry weather early and the rye taking some moisture out of the ground. But where does that all fit in what we're talking about here?
Yeah, Don, this is actually a really good example of how things have changed. So 2 years ago, if you guys would have gone through this, and technically last year, so that you were still under those old rules, farmers who were using those cover crops, according to these rules, would have had to have gone out and get two agronomic experts to provide written advice on how to terminate that cereal rye in that delayed situation. So the growing conditions were not typical or appropriate for the termination that you had planned, or the growth just wasn't quite there. They weren't elongated enough for rolling crimping to work. And so you would have had to have gone out and get documentation. Now, the way that things work starting in the 2020 cropping year, so again, 2019, we're still under the old rules, not enough time for USDA to fully implement these. So for 2020, what we're looking at is that you wouldn't have to do anything in particular. Just find what you think would work best and implement it. So in your situation, the beans yielded just fine. Case closed. There's no issues. We don't have to do extra paperwork. We don't have to go around and worry about that. Now, if you're at the time, if you're curious or concerned about crop insurance coverage, then what I would recommend, and this is true for any farmer who's dealing with wet weather and you can't get out there and side dress, or you can't get out there and control weeds, is to talk to an expert and just get a little advice and say, what's my next best option? And if you do that, then you've done your due diligence and you've preserved your eligibility. So
does that answer your question, Don?
Yeah.
So and you may be wondering, you may be thinking about this question may be coming, and I'm not sure what your answer might be, but what qualifies an expert?
That was my question, Ryan. But
yes.
Go ahead, Dan Tower.
Yeah.
Are you pointing to that?
I've had people call me and who's an expert, and basically it's wide open as what I see it. Obviously, we think of a district conservation and extension agent, but the reality is many times an experienced farmer is a lot better expert than those folks. We know it depends.
Yeah. So there's two things here. So one is the RMA does have a definition of an expert. So there are some minimum standards here. So you guys mentioned one. So extension. So if somebody is employed as an extension agent, they would be considered an expert. Somebody who is a certified crop consultant or certified agronomist, as well as a land-grant university researcher employed at a land-grant university to conduct research on agronomic crops. This last farm bill has added one additional category for conservation practices, so things like cover crops, and that is NRCS agent. Now, as Dan mentioned, there are a lot of farmers that know a lot more about this than some of these defined experts, and so that's up to you then to help educate that person, educate that expert so that they know that they can then advise to you what needs to be done. So, and this is it's kind of a clunky system in crop insurance, but it's a necessary part to ensure that farmers aren't gaming the system. So as much as it's a headache, it's also good to help defend and protect crop insurance. But the important thing here is that it applies to all practices now, not just soil health practices.
And I guess, Ryan, my question is has there been any pushback when someone quote said that this person is an expert?
So in terms of RMA, no. So if you have found somebody who meets one of those qualifications, then in their book, they're an expert.
So in other words, Don could have signed off on that, and they were doing the best they could under the circumstances, but weather was outside of the control. So, farmer did the best job possible.
Right. Yep. That's correct.
Well, I would just say that at least we have a good option now that will allow for some, for some further practices. I know that could get into a gray area, but at least we have that option now. So I think we can celebrate that. Even though it's murky in one way, I think speaking as a farmer, I would rather have it a little murky than really cut and dried in this case. So I'm glad for this position, for this update.
Oh,
Yeah, it's going in the right direction.
Right. Okay. Any other quick comment or follow up? We need to move on. Okay, Ryan. Let's
All right,
keep going, wrap her up, and we'll have time for some more questions then.
Yeah. Okay. Sounds good. So this is the termination guideline map. So again, for producers new to cover cropping. So for a lot of you, this is probably old, or you guys are well beyond this. The point here, and I've heard somebody was in Oklahoma. So under the new rules, what this means is that if you've got, you look through the plains where the zones or the termination deadlines change rather quickly. Under the new rules, these really don't apply. I've known producers in central Oklahoma that terminated after planting, and they're in this orange zone 2. Well, they had to basically drop their insurance coverage. Well, now they qualify for insurance coverage because they can prove that this works and makes sense. So, like I said, so this is still useful for new people, but for experienced cover croppers, you guys are well beyond that. So like I mentioned, there are some of these other more structural issues, and I'm trying to go through these rather quickly. The goal here is that there are these fundamental components to crop insurance and how it works. And in each of these areas, they do not adequately consider for the risk mitigating capacity of soil health practices. And so they essentially disincentivize farmers from using these practices. And so in all 3 of these levels, we're trying to fight to get that corrected. So I'm going to walk you through that real quickly. So with crop insurance, it's an annual contract. You don't insure for 5 or 10 years. And so you insure every March 15th, you sign up for new crop insurance coverage. So what that means is that the program is not designed to reward for carryover effects of the previous season. So simple things like erosion, managing for infiltration or compaction, salinity, managing the weed seed bank, or building your soil organic matter over a period of years doesn't enter into the equation. I mean, the most obvious one is that they do not consider the impact of crop rotation on the insurable yield. And so somebody who's farming a corn system versus somebody who does corn, beans, oats, alfalfa, that corn is going to be treated with the same level of risk. And I'll show you some examples that that's not the true case. Okay, here's the second structural issue, and something that we're trying to correct, is the risk rating pools. So everybody's familiar with the basics of insurance, that we all get grouped into a pool, either through our employer or through some other means, and we get insured together. That's how insurance companies need to work to sort of balance out the risk. Now, within that pool, there are some people who are slightly higher risk and some that are slightly lower. But the important thing in healthcare and auto insurance and all these others is that within that pool, they account for behavioral changes, different risk levels that we take upon ourselves. So the biggest example is smoking versus not smoking. Significant different pricing in premiums and oftentimes separate insurance pools. In crop insurance, that's not how it works. We are all placed in a pool based on our county. Now, that's a good way to account for weather variation. We all experience the same weather, but it doesn't account for our capacity, because of our practices, for how we manage that risk. So my suggestion here is long-term that we should get into a situation where we have different pools for counties or for groups of counties, and based on practices, so that we can account for that difference in risk. All right, so the third factor here is the APH, and that is approved production history. So basically your average yield or over a number of years. So they use a 10-year rolling yield history to establish that APH. Now the big assumption here, so that's fine, you can use that rolling average. That's a reasonable thing to do. Here's the problem. They assume that the same yield variation regardless of practices. And so, and the other assumption here is that there's somehow less risk with higher averages. Now, we're starting to see some studies that are showing that average really doesn't reflect your true level of risk. As some of you have experienced, I know I've experienced this, where if I adopt some of these practices, my average might go down by just a tiny smidge, but it also, I don't have those big variations anymore. Everything is just consistent year in and year out, right by the average, which means that I no longer file any claims. I just don't have losses that are claimable. So other farmers can have a higher average, but they also have a much wider swing in that year-to-year variation. Now that's a high-risk situation for crop insurance companies. So this was a study out of Canada a few years ago, so I just want to highlight this. This was a long-term 31-year study looking at this. So basically what we've known all along, but again, these experts have quantified it, so it's helpful that they made the case for us. Short rotations had the highest chance of lowest yield. So like I just mentioned, the biggest swing. Tillage in this situation widened the yield curve. So higher highs on those really perfect weather years, but lower lows on the really tough years. And in particular, crop rotation really proved out in yield stability in those really challenging weather years. So these are the exact practices that crop insurance should be rewarding, except structurally, they just can't figure that out. And I wanted to get to this graph here on your right. And so this is a good way to sort of try to illustrate this. The top graph is we'll call that a conventional production practice yield curve. So the further to the right that you go, you might have a higher average. And so that peak of that graph is your yield average. So that's fine, but you'll notice that it's also a wider curve, which means that you have much more yield variation year to year. And so you're more prone to wild yield swings based on the weather. As opposed to the graph on the bottom, which has a lower average, its peak is to the left, but it also is a very narrow graph. And so it has very little yield variation. The key point here is the crop insurance companies pay out anytime the yield gets in that darkened or shaded area. So that means if it's a bigger shaded area, it's costing them more money. And if we're not encouraging producers to manage these risks, there are some structural fundamental issues here. So let me lay out two more slides and then I'll open up for questions. So maybe some of you have felt this, I felt this way. Because of all these structural issues in crop insurance, I'm starting to wonder, what's my return on investment? If I'm not getting a payout after 6, 7, 8 years, then why am I putting all this money? It should be a question we should be asking of any input, right? These are tough times, so we should constantly be evaluating and making that decision. And if the premium doesn't match a return, we're going to start asking that question. Here's the problem. If this 9% on this SARE survey proves out true, these are the farmers that are least risky. That means they are providing more premium than they're costing the program, which means they're subsidizing other farmers, other more risky farmers. So if they start to opt out, that means that the crop insurance program has to re-rate everybody else who's still in the pool. That means the premiums go up because we don't have that subsidy. That happens, then the next group of low-risk producers opt out. It's called the death spiral in insurance. So there's a potential, if they don't address these core issues, that we could see a destabilization of the entire insurance program. So it's imperative that we see some of these changes. So this is going to take some time, but this last farm bill was the first step, and we're hoping is that we start. We call it a 2 farm bill strategy. We got the first step done. Now the next step is going to be laid out in the next farm bill, and at that point we should start to see some of these issues getting addressed. So I'm going to open it up there for other questions.
Well, that's really that last thing you brought out there, Ryan, is quite insightful, because I hadn't thought about it, taking it to that level. That, I mean, I could see some momentum here where this could almost hopefully, and I think maybe you can comment on this, but it'll actually incentivize farmers from a crop insurance perspective to actually start using soil health practices, including cover crops, right? Is that not
Absolutely.
attainable? Yeah.
That is attainable if we change some of these things, how they equate yield average to risk. If they start considering for those different graphs for different practices, then it should reduce the premium. So farmers who start switching will see a reduced cost. Fundamental to the crop insurance program, not an added subsidy, but fundamental. This is your true reflection of risk. And what we could see is that if you're paying maybe $15 an acre now, if you're going to soil health practices, 2 things will happen. So one, the soil health practices, that price could go down to maybe $10 an acre. If you're still continuing in the conventional practices, again, if we're getting more specific, that means that those prices are probably going to go a little higher, more like instead of 15, more like $18, $19.
Yeah, that'll get some farmers' attention.
That'll get some attention, yeah.
Yeah. Okay.
Hey,
Well,
Ron,
I have
it's
one.
Don again. Oh, I'm
Go ahead,
sorry.
Don. Go ahead, Don.
Well, I was just going to say, and all that being said, then the administration came out yesterday with their proposed budget for 2020 with a significant decrease in the subsidy for crop insurance, and where would that all play if that came out?
Yeah, so that's an across-the-top haircut, and I wasn't sure if that was, I believe that's in the administration and overhead, as well as the harvest price option. I know they've been pushing that the last couple of years. So it doesn't change the message here. What that would change, would change to some extent some of the participation of farmers. And some of predominantly it would change the insurance levels that they select. So if they're historically insuring at 80 or 85% coverage, they might drop down to 70 or 75%. Because that would provide the same cost, maybe at a little bit of a reduced coverage level. So that would be the biggest impact of those budget decisions. But even in that new situation,
to see how that plays out.
Yeah, even in that new situation, all of this still remains true. We still need better accuracy to reward some of these better practices.
Few things here on the chat. Our buddy Fletch up in North Dakota, he's asking a question here. What about interseeding in a situation like seeding red clover with spring wheat, for example? And I know that's kind of a tried and true practice from decades ago, but it's kind of being reborn again. What about that, Ryan?
Yeah, so the good thing is, like you mentioned, that's a tried and true practice that's pretty historic in a lot of regions. And so if that has some historic founding of being a practice even 10, 20 years ago, generally it's going to have insurance coverage. The key here is if you have even just if there's some sort of doubt that you can whether or not it's insurable, whether or not your crop insurance company will insure it. Even just having one study in state from a land grant that shows that, hey, this makes sense, having that handy, that's so important for having that conversation. And oftentimes the best way is just go talk to that agent directly, educate them, and then they'll feel comfortable, and you can move on with coverage.
Okay, other questions from anybody? John from Ohio, I'll unmute you if you have a question. Your line's a little loud. I had to unmute you. Do you have a question, John? I want to give you a chance.
No, I've been trying to keep.
Okay, that's fine. Okay, any other people have a question here for Ryan about crop insurance? Anybody? Well, if there's, I have another question, Ryan. What do you do with, let's just call I'm not sure what word to use here, either an ignorant or an arrogant crop insurance person who just isn't really up to speed in this. I know they're supposed to be, but I've heard of this where some of the actual agents, they're not really favorable to some of this newer stuff and maybe just uninformed. How do you recommend a farmer or anybody that comes in contact with someone like it? What should they do when they run into someone who's really kind of trying to throw water on some of these new options we have with crop insurance and cover crops?
Yeah, the simple thing is do like I did, find a new agent.
Okay. So you literally found a new agent.
Oh yeah.
Okay.
I called around and just started asking these agents their knowledge level of how they treat cover crops. And when I found one that said, I don't know, but I will go learn, that was an indication to me, like, okay, I can work with that person.
I'm assuming you're trying to, you can be the teacher there a little bit, which is good.
Oh yeah, absolutely. They liked having me because I'm the guinea pig and they can ask me questions. So
okay.
But yeah, that's the important thing. That person, they may change their tune to close the deal and get you signed up, but when there's an issue, you need to depend on that person to stand up for you.
Right.
They're gonna go back to their true colors when push comes to shove.
Sure. Well, Fletcher from North Dakota just chatted in here. He meant appeal. You can appeal this sometimes if you need to go that far. And he said they tend to side with farmers. So I don't know if that's a North Dakota thing or what, but that's just a comment from a farmer from North Dakota here. So I don't know if you have a follow up on that, Ryan. If you need, can you appeal? What's the process of that? Anything on appealing, Ryan? Do you know anything about that? If you need to appeal? Are you still there, Ryan?
Emergency.
Oh, well, I see Susanna has her mic open. Do you have a question, Susanna?
Yeah, I am in Northwest Indiana. I'm a grazing land specialist, and we're starting to see more interest in folks grazing their cover crops. In the past, it's been a matter of the attitude, well, if I plant something and I can get them out there for a little bit, that's fine. But we're seeing more and more people that are really bringing grazing into the overarching management system to where they're really trying to plan for forage availability as well as utilizing the soil health principles. I'm wondering how that is affected by the crop insurance.
Yeah, not a whole lot changes there, Susanna. It's the key thing there is that crop insurance, the companies and the agents are going to be looking at termination of that cover crop. And depending on the cover crop, a good solid grazing would accomplish that, and others it would not. And so if you don't fully terminate that cover crop before planting that insured crop, they're going to have some questions and concerns. So the key thing there is obviously, so go out and graze it, but then terminate it in whichever way to make sure that you meet those needs, and then plant your insured crop. Obviously, the challenge becomes your herbicide rotations and restrictions and trying to figure out everything with grazing. And so that's why we need experts like you to really be able to provide that guidance.
And the actual season of grazing, whether they're planting something early in the spring to be able to graze and then plant their regular cash crop, or whether we're harvesting wheat in June and planting a cover crop to graze, or we're grazing in the fall, none of that really is part of a challenge from the crop insurance side.
Right. You do whatever you want with that cover crop during the fall, if it's after small grains, or during the spring, if you're going to, a late planting of beans, or whatever. Where they get interested and where they come back into the equation is termination of that cover crop.
Very good.
Hey, great question, Susanna. It was good we got a grazing question in there. Other questions from anybody? Go ahead, Lloyd.
This is a little bit more facetious, but the term that we use, treat your cover crop like your cash crop. Is there any insurance coverage for that?
So not at this point in time. I think there are a few crop insurance products for pastures, and those are typically tied to basically forage amount or biomass amount. So they're weather indexed, and so when the weather goes to a drought, then you could file a claim. But I'm not sure if cover crops would necessarily qualify in that product. Otherwise, at this point in time, there are no products out there that ensure that cover crop growth and to compensate a producer if you experience some weather issues with that growth of the cover crop.
Well, that's a good question there, Lloyd. I actually never even thought about that. I think I might have heard about it once before, but that's just an interesting thing to ponder there. Other questions from anybody? Dan, do you have a question? Dan Towery.
Well, just a follow up to that one. I mean, you look at the growth that we've gotten in our cover crop so far. Now, maybe that's going to change big time in the next 30 days. But there'd be a lot of claims out there right now.
That's an interesting. That's one there for you to Ryan to mull over.
But of course, again, you have to go back and look at the seeding date.
Yeah. But the seeding date was affected by weather, most of the time, right?
Yes.
Yeah. Yes. I would generally say that I don't expect a product to develop anytime soon. There are just like you guys are sort of intimating, there's so many variables here.
Right.
Seeding date, the weather conditions, and the fact that, we all have so many different goals in mind here. The key thing with the cash crop is, okay, we know it, and at the end, here's an immediate measurable that a farmer goes through. What's the yield, right? And so that's easy to verify.
Yeah.
It gets to be a little more challenging when you're talking biomass or coverage.
So
great.
I have a question, and this is kind of out there on the extreme, but working with a few innovators that are doing companion cropping, and so like it's putting something in with the wheat with wide row spacings. I mean, I don't think there are any experts on that one. I mean.
Yeah. So and that is sort of the next frontier, and that's where I really wanted these rules changed in the Farm Bill. And so right now, I mean, if you guys are out there trying it and you have good confidence in it, you're able to go do it and you don't lose eligibility. The issue becomes in a situation where the farmer experiences a yield loss. It could be totally because of weather, but they may question it because of the different practices. Then you'll need to draw in some experts who would take a look at that. Now, obviously, if we can have some land grant universities document some yield evidence, that would be really significant. So all you researchers out there, please, or contact the land grants, please twist their arms and get them to do some of this cool stuff, because it really helps in these new rules. It provides that cover for innovators to go out there and then implement it.
And I hate to bust your bubble, Ryan, but we go to land grant universities and they're going to say, show me the money.
Yeah, I know it.
Mhm. Yeah. Well,
So
yep. Go ahead.
I would just add, so there is potential, I mean, another model to look at to provide documentation of some of these practices. A good example is Practical Farmers of Iowa, where they
Hmm.
gather up some farmers and they apply scientific measurement, documenting the practice itself and proving out the yields. And that would stand up in an arbitration case on crop insurance.
Hmm.
And so
Hmm.
that could be your expert to turn to.
Hmm. So that could be probably a state by state kind of a deal there, right, Ryan? Or does the Practical
Absolutely.
Farmers, do they go outside of Iowa for any of their stuff? I know they're primarily centered there.
Yeah, they're primarily focused in Iowa. They're working with some farmers in Minnesota and Wisconsin now, but I think there are a number of organizations, like you said, Steve, at the state level that could
Yeah.
replicate that model. That
Right.
could work with them.
Right. Good. Okay, these are great questions. Other questions? Quick, we're winding up here. We got to wind up in a couple minutes, but I don't want to. There's some pressing questions. Anybody have any more questions? Okay, I'll just do a few housekeeping announcements, and I'll get a chance one more time for questions. Next week, I am going to the country of Hungary, and we'll be presenting over there to some previous groups I've been before, but also what's really cool is I'm planning on meeting with the world's largest vegetable processor named Bonduelle. Been talking to them for a while, and having said that, there will be no webinar next week as I'm out of the country, but the following week I want to report in as to what I'll be doing, what my experience was over there. And then just to give you a little bit of a heads up, we have Bob Recker, who is associated with wide row corn, 60-inch corn coming in, and right there, that's a crop insurance probably issue. But he's going to talk about 60-inch corn and how you can make that work. And probably not for everybody, but going to have Bob in there, and I have Abby Wick, who I've been wanting to have on here for a while because she's from North Dakota, and I consider her one of the experts on dealing with salinity issues. And actually, I see that Fletch actually mentioned her. He goes to her for some advice and so forth. So I was able to meet her when I spoke out that way this past December. So she's going to be on for talking about salinity issues. It's an area that I certainly don't have much experience on, but a topic comes up, so I wanted to bring someone on who's able to do that. And then later on in April, I'm really excited to be able to get Rowan Atwood from Wrangler Jeans. You guys have been listening to me for a while. I've heard of my involvement there, where Wrangler Jeans is putting forth what I would consider a valiant effort to incentivize, encourage their cotton farmers to use soil health principles and use cover crops. So it's a real honor to have someone like him, that I'll be interviewing him, just to see a little bit where I think this represents where the future of agriculture may be going, where some of these larger companies, corporations are going to be essentially requiring a certain amount of soil health and sustainability in their products. Ryan mentioned at the very outset today that 75% of people are willing to pay a little bit more for sustainably grown food or whatever. Whether or not it's one thing to say that, we all know. It's another thing for actually, will they open their wallets up? I will say this, that it certainly is something that I see it as an opportunity that we as cover croppers, soil health people can tap into. So that's what's coming up. So I'll circle back around. Any more questions for Ryan while he's still on the phone?
Well, Steve.
Yeah.
Quick question about your guy from Levi's. I
Yeah.
did just
It's
see
Wrangler.
that,
It's Wrangler.
or
But yeah.
Wrangler. I mean,
Yeah.
I think that's the one that is just offering their stock is going public.
Oh, I don't know.
So I could see the tie-in between what they're doing with the whole cover crop effort and their stock offering.
Well, that's interesting. Don't know. I'll follow up on it. I do know that Wrangler put out last year a kind of a marketing campaign that was tough denim, gentle footprint. I think it's a pretty powerful one. He said they're unveiling a new one here in the middle of April that he's going to talk to us about. So they're really on it. So hey, you never know, Dan.
Yep.
Could be. Okay, any other quick questions for Ryan while he's on today? Okay, thank you all. Appreciate your great questions. Thank you, Ryan. I really appreciate what you're doing.
Yeah,
And
absolutely.
keep up the good work. You're making an impact out there. And I was just speaking as a farmer. We appreciate it, what you're doing, and yeah, keep up the good work there. So, thank everybody for being on today. I'll see you in about 2 weeks. And as always, stay curious and keep learning.